Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 27th, 2022. And Bitcoin, as well as the rest of the cryptocurrency market, as well as the stock market, has experienced a bit of a drawdown, okay? And we know that any drawdown in a bear market or at a pivot point or at a consolidation reversal or potential kind of sort of reversal point makes people really nervous, okay? And for good reason, right? It may be the beginning of a larger move down, or it may be the last drawdown, the last sort of wick down, or whatever you want to call it, before a big move up, okay? So in today's live stream, we're going to see if we can't get some clues, some insight as to how to read this price action, okay? Not only on Bitcoin, but also on the S&P 500, also on the DXY market mover. If that interests you, then stay tuned. Hope you're having a great Tuesday. All right, it's Tuesday here in the United States. So let's get into it, right? I circled it. I put an arrow to it for the thumbnail, and this is what everyone's looking at right here, okay? Bitcoin, right? We experienced yesterday I said it's likely that we get a big move in Bitcoin, right, to the upside. And this was not what I was referring to, actually, right? This right here is not a big move, okay? Because I was saying it's likely that we get a big move and we target $30,000, right? This only came to about $20,000, all right, and found resistance and then retraced, okay? This isn't a bad move. This isn't a bearish move. This is just part and parcel of consolidation reversal patterns, okay? Now, the people who may be disappointed are in two camps. Perhaps there are people that are disappointed, people who are bullishly biased that are disappointed, maybe in two camps. All right, maybe they thought, okay, well, maybe we have to wait a little longer, all right? But it's likely that this does move to the upside. Okay, that's one camp. The second camp are people who try to trade these ranges, and they're just getting chopped up. They're just getting chopped up, over and over again because of this choppy price action, up and down price action. Like, it's not the best idea, and I've said this before in previous episodes. If you're at a macro bottom, which is likely a macro bottom, you go on a high time frame and you see that, right? It's likely that we're close to a bottom. It's silly to trade the small time frames and to try and, long this and then sell, and then short this. Like, you're just going to kill yourself. Like, you don't really, these reversal patterns, these AB bases, as we know on this channel, they're challenging to read, and they don't always follow a specific script, okay? We have a general guidelines, right? 2 degrees of AB basing, right? That's what we use on this channel. 2 degrees of AB basing and maybe a pivot, maybe a couple pivots, who knows, all right? But you're trying to read this, and you're like, okay, maybe this is, your big A, this is your big B, maybe this is your small a and this is your small b. But before this printed, right, you wouldn't be, it wouldn't be out of the ordinary, or you wouldn't be accused of being a charlatan or like a bad chartist or bad sort of analyst if you read this as small a and this as small b, and then this as the beginning of your impulse. Like, it's tough to read, right? But at the end of the day, you're looking for those 2 degrees of AB basing, okay? So as it stands now, it looks like this whole thing was small a, and this is small b. So if you so that's basically your second degree of AB basing, okay? And if you take this small a from the bottom to the top, you can see that small b retraces right to the 0.618 or golden mean, right? The 5 ratio of this entire wave, okay? Again, it's easier to read after it's printed, but good luck trying to read it with 100% or 90% precision while it's printing, okay? It's just a general guideline. But what you don't do, and not financial advice, knock yourself out if you want to, is try to be greedy and long and short and long and short. Like, that's the second camp of people who are disappointed in this, because, you know, they're getting stopped out for no reason. Guys, if we're at a macro bottom, just take every opportunity, if you have dry powder, and buy the bottoms of the channel. And then just wait until it breaks out. And if it breaks down, then you set a stop somewhere here. Keep it simple, right? And this would be your stop somewhere here or something like that. Do you understand what I'm saying? Like, you don't have to small time frame trade. There's certain times you want a small time frame trade. Other times it's not a good idea. It just, the math doesn't work out. It's not in your favor. Because if this indeed is a macro bottom, and we're going to put in impulses that go from where we are now, 20K to 30K, and that's just one leg, why the hell would you bother wasting your time and your precious capital trying to short time frame trade this price action? To each his own. But if you have one strategy for every situation, you're probably not doing it right. Again, if you have one strategy for every situation, you're probably not doing it right. Down market, there should be a certain strategy for trading. Up market, up only market, impulsive to the upside market, there should be a certain strategy to trading. Sideways market, there should be a certain strategy to trading, okay? And when I'm saying sideways market, I'm meaning you're not at a like high time frame read of the market, whatever market you're dealing with. At the high time frame, you're in a sideways market, you're in no man's land, you're in a wave 4 complex correction or something like that. Okay, then go ahead. There's no other opportunity really to make money. You take small amount of your capital, and you know, you can trade up and in and up and down and up and down, because who knows when that fifth wave is going to come. Okay, so that's just a bit of, you know, my thoughts on trading and how to trade these levels and, you know, strategies. So if you're high time frame trader and you're expecting with a high degree of probability that move up from these levels, you don't really care if your AB bases look one way or another way, just as long as you're safe, okay? You want to get out of you do not want your stops or your liquidation points anywhere in this region, okay? Anywhere in these regions, right? You want to stay clear of these regions, right? Right here. Right here. And you just want to make sure that you're able to accumulate in these ranges for your next move. That's your strategy. If you're a high time frame trader for this particular market at this particular time, because you recognize on a larger time frame that there's something brewing, something much larger. All right. So that's my take on Bitcoin. Now, why are we bullish? Why is the title "Don't Be Fooled"? Okay, obviously this is a drawdown, and people will say the bulls take the stairs, the bears take the elevator. In a bear market, in a bull market, it's the opposite. Okay, people who say, "Oh, it's one way and always one way," they understand nothing of markets. Obviously, in a bear market, or at the bottom of a bear market, or in a consolidation reversal from a bear market to a bull market, you will get, you know, and Bitcoin's still technically not reversed yet, right? You will get that sense that any move up takes a long time and any move down is much swifter, okay? But once the trend changes in earnest and you actually start printing huge moves to the upside, right? It'll be the opposite. So no market is always one way or another, all right? Just, you know, if you zoom out enough, you actually can make the argument that it's the opposite, complete opposite, right? That, you know, on the monthly time frame, it seems not to go. It seems but to go in one direction, and every retracement to the downside is like, a minor retracement. It's all about your perspective, all right? So now we talked about Bitcoin. Let's have a quick look at the DXY, the market mover, okay? So we said yesterday that this was likely the reversal we've been looking for, okay? And why did we say that? And this is the main reason why I'm bullish. Because you have a three-wave rejection at crucial resistance, okay? Let's just zoom out for a second for those of you who are not subscribed. Okay, actually, let's zoom out on the weekly. Okay, so what we're looking at here is a wave 5 in my estimation, okay? A wave 5 that's extended. And what's extended about this wave 5 is the fifth wave, okay? And I started counting that here with the primary count, with the intermediate count. So this extended primary fifth wave that you can see with this intermediate count here. And the extension is in the minor wave 5, okay? Which is an ascending wedge, or an ending diagonal, a diverging ending diagonal, okay? And this is what I'm looking at right here. So let's zoom in. And actually, before we zoom in, I want you to notice the 14-year resistance. Yes, indeed, it's 14 years worth of resistance. When you zoom out enough, you can see that this resistance has been in play since 2009, okay? It had an effect here, and it should have an effect here. You got a throw over in wave 3. Seems to be getting a throw over here in wave 5, okay? Zooming back in on the 4-hourly time frame. So you're at major resistance in terms of support and resistance, okay? So this is one reason. We feel like we're at resistance. Obviously, our momentum indicators are all overbought. And we count 5 waves, okay? If you want to, put your Elliott wave count in, this is counting impulses. It's not as challenging as counting corrective waves, but, there's still some challenge here because this is an ending diagonal, which counts 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. So you're essentially counting corrective waves still, okay, but in impulse, right? That's one of the cases in Elliott wave where you can get corrective waves in an impulse in ending diagonals, okay? And once again, those are 3, 3, 3, 3, 3. Okay, now let's focus on the end of this wave right here, which we are taking to be wave 5. This 3-wave structure, right, of our ending diagonal, our ascending broadening wedge, okay? Let's focus on this right here. Okay, so we're zoomed in. And here, for me, I'm counting this as 1, 2, 3, 4, 5, okay? And this works out quite nicely with our resistance of that ascending broadening wedge. It works out quite nicely with the resistance of the ascending broadening wedge. We got rejection right there. And then I count 5 waves there, okay? And it makes sense also because wave 1 is the same size as wave 3, more or less. So you can expect an expanded wave 5, and usually that wave 5 expansion goes between 1, 2, 3, 6 and 1, 6, 1, 8, typically hitting the 1, 6, 1, 8. So just measuring this with the Fibonacci extension tool, you would go waves 1 through 3, retracement of wave 4. So let's do that. Waves 1 through 3, retracement of wave 4. Okay. Seems to be a little short. Now, given that we're in it's possible that it's short, given that this is actually part of an ending diagonal, right? So it's hit the 1 Fibonacci extension. Let's actually take, because in a regular 5 through 5 through 5, we expect that extended wave 5 with a truncated wave 3 to hit 1, 6, 1, 8, okay? But given that this is in the context of a corrective wave, okay, maybe going between 1 and 1, 2, 3, 6 is what we should be expecting. Okay, I really like the fact that we hit the 2, 2, 3, 6 here, just given the wave 1 extension retracement of wave 2, because we know that 2, 2, 3, 6 is the minimum extension for any impulse. Okay, just mathematically speaking on the balance of probability. In any case, just mathematically, I'm satisfied with this extension were we to stop here. Okay, support and resistance, I'm also satisfied. Now, let's focus on this. And as you'll notice, this analysis always goes from broad to narrow, from high time frames to small time frames, right? Because you always want context. And if you're getting value, please like, share, and subscribe. So what I'm seeing here, like I said, I really like this three-wave rejection. Obviously, this could be in the context of an intra-wave correction, right? But given the context that I just elaborated, this is more than likely to be the reversal we've been waiting for, okay? And if it is, then here's what we're looking at, okay? And this is why I'm bullish, right? On stocks, on cryptos, from here on out. Here you see an initial break of structure, a three-wave move. Here you have your 1, 2, 3-wave move, a B wave, okay? Which is customary, right? In a reversal move, you get a flat correction, right? So you have 3 waves down, 1, 2, 3 waves up. You should get a pivot, and then you should start your impulse down, okay? So this should be the pivot. So this is why I don't think I'm not bearish at all here, because I'm looking and it looks like this is exactly what we should expect, okay? And if we break this down even further, given our skills in reading corrective price action, specifically A-B basing, right? So consolidative reversal patterns, right? You can read 2 degrees of A-B basing here. So where would the 2 degrees be? This is obviously the first degree, okay? And this would be, let's see. So this would be their first degree. This would be your this would be your first degree. So this would be your big A, and this would be your big B. Okay, so this is your first degree of A-B basing. A wave and counter B wave, okay? And then another A wave down, which would be your small a, and this would be your second degree, small b, okay? And then a pivot right here before a continuation down. This is how I'm reading it, okay? 2 degrees of A-B basing. Again, it works both ways, from the bottom to the top, from the top to the bottom, okay? Let me just take a second, check for any comments. None. Let's keep it moving. Okay, so, and now we can use our indicators to corroborate our reads, and lo and behold, our on the hourly time frame, our stochastic RSI is completely overbought, okay, and crossing bearish, okay? So this corroborates our read on this price action right here, okay? So this is how I like to use indicators corroboratively, not just, I'm going to use some indicators and pray that the price action kind of does what the indicator says, right? You want to be able to read the price action first, I believe, in my opinion, then use the indicator to corroborate whatever read you have on the price action. So we're seeing a bearish cross on the hourly time frame. Let's go on some other time frames to see what's going on. We can even drop down to the 15-minute time frame. We're seeing we're completely overbought on the 15-minute time frame. Let's go to the 4-hourly time frame. We can see that we're oversold on the 4-hourly time frame, but it doesn't look like we're initiating a big move because we've crossed bullish. But then the D line, or the pink line, isn't following the K line, which is indicative of lack of follow through, okay? On the daily time frame, we're completely overbought, which is not a good sign. Looking at this candle, okay, although there's a big wick to the downside, you have an increasingly widening or broadening or yeah, you have an increasingly large, I'm trying to think of the word. You have an increasing wick on the top side, okay? All right. So that's the daily time frame. The weekly time frame, you're completely overbought. The monthly time frame, you're also completely overbought. You're about to cross bearish, okay? So everything in our indicators is telling us that this is likely a top, okay? Anything in our price action read is saying this is likely a top, okay? Looking at our DXY, if this indeed is a top, then we should be seeing bottom formations on the SPX, in Bitcoin, in other assets, okay? So now let's look at the SPX, okay? Everybody's kind of throwing their hands up and saying, see, I told you so. This is super bearish. It's going to zero. Once again, and I said this yesterday, the most important thing is holding support, okay? We have not broken structural support, and we've held it for quite some time. You know, despite all these things that the DXY has done, it's gone up tremendously. It's put in a blow off top, and all the while, even the SPX, the humble SPX, has held its ground, okay? This is good A-B basing right there, right? A big A, a big B. I do expect another degree of A-B basing before actual bona fide impulsive price action in this impulsive C wave, okay? So like this is a B wave, this blue kind of this blue ABC correction is a B wave, right? But this leg of the B wave is the C wave. That's what I'm referring to, okay? So that's the SPX. We're still on support. Nothing wrong with that. Nothing bearish about that. I'm not bearish on support. I look on the 4-hourly time frame. I check out my momentum indicators. We're completely oversold. That's a great sign for continuation to the upside. I go on my daily time frame, completely oversold. Great sign for continuation to the upside. I go on my weekly time frame. My momentum indicators also telling me that I'm oversold, right? And my monthly indicators telling me I'm completely oversold. It's more likely than not that the next big move is up, okay? So that's the SPX. Now let's get into crypto, because I know a lot of you guys are more interested in crypto, as am I, okay? Back to what we've been looking at. So let's just go down the line, all right? Obviously, we all know that Bitcoin and most crypto assets have held support and are holding support, okay? That support has been held for 4 months now. We've been in this consolidative reversal pattern for about 120 days, okay? Maybe a little more than 100 days in Bitcoin, but a little over 130 days in most altcoins, okay? Let's jump down to the weekly time frame. Okay, and in the weekly time frame, whoops. Actually, we don't need to be in the weekly time frame. So what's interesting is on the daily time frame, you've got this move that just took us back down to support, but at the same time, our momentum indicators indicating that momentum is increasing. So that basically tells you that, you know, these algorithms that are used to give to make up this stochastic RSI is basically saying, like, you're really bullish now. You're cross bullish, and you're even more bullish than you were yesterday, even though you went up just to come back down. That indicates that it's a corrective move that will most likely yield in a reversal to the top. So, you know, that's just looking at the price action from the lens of our stochastic RSI indicator. Same with Cardano. You're at support, okay? Support has not yet been broken, although I will concede that if you're just doing candlestick analysis, you do not like a candlestick that is formed with a big wick to the upside and a body that's below it, okay? That's bearish. But the day has not yet closed, okay? This candle hasn't closed. Obviously, if it closes like that, that would be problematic, but I don't anticipate that this candle close in that way, okay? So that's my concession there. On the daily time frame, again, Dodo is at support. Most of these assets are on support. Some of these assets are even above support, forming nice rounded bottoms in DOT. In Ethereum, okay, nice rounded bottoms. You're above support right here. Reserve rights, you're way above support, okay? You've actually started your way up, and you're consolidating above the halfway point of this range, okay? And remember, in a range, the bottom is support, the top is resistance, the midway point is support if you're above it, and resistance if you're below it, okay? Synthetics, you're at support right here. Support has not been broken, okay? And mind you, I've got our stochastic RSI on for all of these, and stochastic RSI is telling you that you're crossed bullish and you are oversold, okay? Very important. You want to use your indicators corroboratively, and your indicators are telling you it's a good buy point. Veracity, even though this is one large, massive downtrend, right? On the daily time frame, that means ever since mid-August, you've been going down, 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 down. You have some divergence here, okay, in your stochastic RSI, right? If you look, you can see that you're forming a lower low here, okay, but here you're forming a higher high, okay? So this is likely a reversal point for this trend, okay? Zilliqa, you're at support, okay? And again, if you look, you can see what you most would characterize as a bearish pattern, which is the head and shoulders pattern, okay? Interestingly enough, the head and shoulders pattern, instead of looking at it as bullish and the inverse head and as bearish and the inverse head and shoulders as bullish, right? You can also look at it as a reversal pattern, and if you go on Investopedia, you'll see exactly what I'm talking about. These are reversal patterns. Head and shoulders, inverse head and shoulders, are reversal patterns, okay? Obviously, we get a little more specific on this channel when we talk about AB basing, and, you know, we count AB base as corrective waves. But if you just want to look at the pattern analysis, a lot of these head and shoulders can both break up and down, okay? And when they break up, they indicate reversal. Just a word to the wise, okay? It's not always bearish. Don't fall for that trap. Ravane, also at resistance, and more importantly, completely oversold on the stochastic RSI. Don't be fooled, okay? Same with Kadena, at support. Did I say at resistance? I meant at support here for Ravane. Kadena at support, and yeah, we're holding support, which is what you want to see, yeah? Holding support, oversold on the stochastic RSI. BNB more than holding support, okay? Well, it's holding its support at this higher level, but, you know, it's basically moved to the midway point of this channel. Again, midway point of the channel is support once you're above it, resistance if you're below it. BNB, Binance Coin, has moved above the midway point of its consolidation reversal channel of 130 days, found support on the midway point for a move up. Again, look at these very simply, my friends. Look at it very simply. If it's channel trading, there's just very simple, and I learned this from, who did I learn this from? I learned this from Chart Champions. Okay, I used to watch everything. I've taken a little bit from everybody. Obviously, my expertise is in Elliott wave theory, but Chart Champions, they're like some of the best channel traders out there. I think the problem with their strategy is, like what I said in the beginning of the video, everything's a channel to them, which everything can be seen as a channel, and it's all well and good, you know, to each their own. It doesn't matter what phase of the market they're in, they're looking at trading the channel, okay? And I think, you know, whatever, but it makes more sense to, instead of try to trade this up and down, just accumulate and then wait, right? Accumulate and wait. But anyway, the bottom is support, top is resistance, the middle is support if you're above it, resistance if you're below it, You know, it's so simple, it's so obvious, and it's so useful. Okay. Litecoin, same thing. You're at support. You're holding support. No issues there. Harmony 1, you're a little bit above support. Okay, you're a little bit above support, and you're holding it. XRP, and by the way, most of these are oversold. Okay, oversold. XRP is one of the few assets that already started its impulse to the upside. Okay, XRP, reserve rights, there are a few that have already started, and you can see it in the momentum indicator. The momentum indicator for XRP and RSR are some of the few where the momentum on the daily time frame at least is overbought. Okay, and so you're close to the middle or the top of the channel, right? So, but XRP, you can see we're at the top of the channel, and we're basically retesting the top as support for a move back up. Okay, so that's super bullish. Like, if you think this is going down and breaking through the channel and then going down and forming a lower low, then, you know, fine. It's to each his own or her own. Okay, but that's more. It's less likely than you know, the alternative. Okay. And Dogecoin, you're retesting this descending wedge. Okay, we've said this before. It started moving up, retesting this wedge for a subsequent move up. Okay, and ETH work. Why is ETH work on my watch list? It's not because I believe in this project or because I'm mad that ETH moved to proof of stake or anything like that. It's just I found a bunch of it in my wallet last night. Apparently they did an airdrop. Okay, so for people who are holding Ethereum. So now I'm trading it, whether I like it or not. I'm not going to sell at the bottom of a market. You know, I know that Bitcoin's at the bottom of a market. So any asset I have now, I'm gonna let just ride out the bull market. Okay. So ETH work is something that I'm going to look at, and to me, this looks very simply like a 1, 2, 3, 4 impulse. Okay, and I'm waiting for a wave 5. Okay. And to really drive that home, you take your Fibonacci extension tool, wave 1, retracement, wave 2, you see that wave 3 hits almost exactly at the 1618, which you expect wave 3 to hit at, right? Do you see that? This is why I use these things, and I'll reiterate this, and I'll keep saying it a million times. I don't use Elliott wave theory because it's a cool idea, and I owe anything to Ralph Nelson Elliott or Elliott Wave International. I have no affiliation to them, or Bob Prechter and Bob Prechter and AJ Frost or anybody in Elliott Wave or does Elliott Wave. I use it because it works. And how do I know it works? Not because I believe somebody who told me or something I read in a book. It's because I go and I read the charts day in and day out, and I see it over and over and over and over and over again. And it ceases to become some nebulous sort of intangible, broad theory that just exists. It becomes practical, experiential knowledge because I experience it and I live it every day. Okay, wave 3 targeting between the 1618 and the 2 Fibonacci extension on average is not some rule. It's my experience that I see chart in, chart out. Here's another example. That's why I say when I see this 1, 2, 3, 4, okay, this is to me very clear. Okay, I pull out my Fibonacci extension tool and I see it and I can't unsee it. Okay, and also it makes sense that this is an impulse because you can see ever since the beginning right here in mid-September, you've been rocketing up your momentum indicator. Okay, so that to me is what's going on with ETH work, and we're gonna just keep an eye on it. I'm not gonna do anything. I don't have a margin or leverage trade on it. I just have a bunch of it in my wallet that I'm just going to sit and leave there and wait until the right time to sell. Yeah, so that's it. Guys, any questions, comments, problems? Lajos Toth says, "Hey Dean, great vid so far. Thank you, my man." Or my friend, I'm not sure, man, woman. La host Toth, one question, if I may. You mentioned that the bottom is likely in, but if I see a series of lower lows and lower highs, shouldn't I wait for a confirmed break of the downtrend resistance? Yeah, you can definitely do that. Okay, it really depends. Oh man, okay, definitely. Yeah, and Lajos, I'm not exactly sure if I'm saying that correctly. If you want to correct me on my pronunciation, go right ahead. I'm not at all offended. I have a, difficult to pronounce name as well, my full name. So it's not at all a problem. And yeah, let me know where you're from. It's always interesting to meet people from other places. So on Lajos' question, Leosh, thank you. So Leosh's question about waiting for confirmation. Oh, Hungary, awesome. I've never been to that part of the world. It's definitely somewhere I want to go. Beautiful. Very few people know the Hungarian language is such an ancient tongue, and it's actually the base Romance language of our English language and most Romance languages. Very, very, very rich culture. It's definitely somewhere I want to visit. I want to go to the caves of Hungary. I don't know why, but I always have wanted to do that. In any case, the question about confirmation, I always say there is no such thing as confirmation writ large. Like, there is no objective confirmation. It really depends for everyone. Okay, so here's an example. To answer Yoshi's question, let's go back to our Bitcoin chart. All right. So let's see. We're looking at Bitcoin. We're making lower lows and lower lows. And this is a valid question, completely valid. Like, nobody wants to buy an asset. Actually, let's zoom out for a second. Let's zoom out. Let's go on log scale to accurately represent or faithfully represent this price action. Okay. Only the professionals are buying over here. Let's just be honest with you. Professionals, and if you're not a professional, you're very savvy. Your mother, your grandma, your aunt and uncle, if they buy here, it's out of luck. Even though this is a large, nobody wants to buy something going down. We always say buy red candles, but nobody wants to do that because it's scary. And we know we're supposed to buy fear. Fear is high. This is when you buy. Fear is low. You probably want to look to sell. But people want to do the opposite. And it's fine, and it makes absolute sense because you don't want to be caught in the drawdown. Now, if you're leverage trading, yeah, your risks are heightened. Okay, I have a bunch of leverage trades where, if the price goes against me, I lose a lot of money and I lose my position. Okay, then I have to be really careful. I have to go into the smaller time frames. I gotta really look. Okay, where can price likely go and when can it likely go where I need it to go? Okay, but if you're spot buying, I don't understand the fear. There should be very little fear unless you're completely clueless and you think this is just gonna keep going down to zero, which a lot of people, even some professionals, think. So I can't really accuse people who have no clue where it's going to go, right? People always say, I have no clue. And they say that like to try to be humble. If you have no clue, you have no business trading, right? You should have some fucking clue. You should have some idea. So the fear in buying and waiting for confirmation is all related to your comfort in reading the markets. That's the simple question. You can't. If the only reason I have 5 figures on leverage in this region is because I've spent years looking at the markets and years building confidence that when I look at something, I know high probability, if this, then that. High probability, if this, then that. I've seen this, hundreds of times, and every single time I've seen this, or 98% of the time I see this, then that happens. This is the only reason I'm confident, okay? If I was just to listen to somebody tell me that, without that experience, I still wouldn't be able to probably make that trade, to be honest with you. It doesn't matter who's telling it to me, because that's a lot of money I'm putting on the line. So confirmation, I think, is directly proportionate to your level of, your degree of confidence in reading the market. Okay? If you read this as a nice double bottom, you're pretty confident. I mean, I could close my eyes and buy spot here. I don't give a damn. I'm not going to be shaken out of my positions. It could go down. I could be completely wrong. It could be a, 1%, 1 out of 100. This breaks down unlike, anything I've ever seen. And I still don't care, because I don't lose my positions. I'll just wait, whatever. You know what I mean? Then I don't need confirmation. Do you see, Layosh? But then, if you're waiting for confirmation, quote unquote, I always say quote unquote because there's no such thing. What is it going to be? Is it going to be a cross of this K and D line? Is it going to be a higher high or whatever? We all know markets never look the same 100% of the time. Like, it's just very rare that you see the same exact thing play out. Like, we can read these AB bases a million times and get a million different variations of the same basic pattern, but still it's tricky because it never looks exactly the same every single time. So you could say there's no such thing as confirmation. Okay, you can very well buy over here and say, well, if we pass 30K, some people say 30K is confirmation, some people say 20K is confirmation, some people say it's got to make a new all-time high, and that's confirmation. That's going to depend. So I think it's important. Every trader should understand confirmation is completely, that word in trading is completely subjective. Okay? And I'll tell you what my confirmation is, okay, to end this. So let's go on the smaller time frames. First and foremost, because of my thesis that I've spent a long time developing on this channel, okay? My trading thesis using, where is it? My trading thesis using the DXY as an inverse correlate to Bitcoin, that gives me so much confidence, because you know what? It's tricky to read these reversal patterns, and I didn't foresee us going up and then down again, right? I didn't foresee that, right? But we're at support, so if it goes up a little and back down to support, whatever, like, it's in my ken, it's within the possibilities that I'm okay with. I know what I don't know. I don't know exactly how it's going to move up and play out these 2 degrees of AB basing, but I know after I look at it, when it's all said and done, I'm going to most likely 98% of the time see 2 degrees of AB basing, and it's going to execute that consolidation reversal. Now, what gives me a lot of confidence in the bottom is this chart. For me personally, given my experience reading the DXY with my chart showing 8 years of almost perfect inverse correlation between the DXY and Bitcoin's price action, I know that when the DXY rejects, it's party time for Bitcoin and cryptos, okay? And I'm seeing on the DXY tons of top signals. I'm seeing this consolidation reversal pattern, 2 degrees of AB basing. This is a lot easier to read for me than reading what Bitcoin's doing. Although, I can try my hand at reading Bitcoin. For me, this is a little easier to read. And both reading together give me the confidence to say, yeah, I'm aping it. So this morning, I bought more XRP. I bought more RSR. I bought more, whatever else I bought. Dodo or whatever the hell else I bought. I bought more. And some of those purchases were on leverage or margin, thereby reducing or increasing my liquidation point, increasing my stops. But I'm like, no, I'm fine because of what I'm reading on the charts here, okay? Not surprised if this 1 degree, right, and then this is your 2 degrees of AB basing. I'm not surprised. Maybe we come up here once again. Maybe, I don't know, but I would not be surprised if we go down here, because It's completely overbought on the DXY, and it's toppish, and we're at some major resistance, okay? So for me, the DXY gives me confidence to read the bottom as I am reading it, and then what gives me further confidence are my indicators, are my price action reads on Bitcoin, my price action reads on altcoins, and so on. Okay, so that's my answer. Confirmation is a completely subjective thing, and I think that's what really makes a good trader, when you can know what that word means to you. What does that mean to you? Okay, because if you don't feel comfortable, don't trade it. If you don't feel comfortable, don't trade it. And you're going to get good when you start getting more comfortable in. It's kind of like a skilled cook, right? They're moving the knife really quickly and cutting the vegetables, and you're like, oh my god, are you scared you're gonna cut your fingers? They're like, no, I've done this a million times. My knife skills have improved to such a degree where I can cut really fast and bark orders at the kitchen, and still make the meal. Once in a while they may nick themselves, but they're still going to more or less finish the meal successfully, right? That margin of error is slimmer, and they're not scared. But if you just pick up a cooking knife and really sharp knife, you're not cooking that fast, and you're not going to be talking and not looking at what you're doing while you're cutting, because that's crazy. Don't do that. Learn to build the skills, build the confidence before you can make those trades, make 5-figure trades. I remember talking to one of my mentors, Jack Schwager, who is the author of the Market Wizards books, and he asked me, one of the first questions he asked me was, hey Dean, do you trade? What's your size? And I'm like, I'm on 4 figures right now. I'm working towards trading 5 figures. He's like, okay, yeah, that's a good litmus. When you start trading 5 figures, then you start getting, okay, you're starting to play with the big boys. I'm like, really, 5 figures? He's like, yeah, 5 figures. If you haven't looked at the Market Wizards books, definitely look. Jack Schwager's, brilliant guy, and it's just basically so many different traders, so many different styles, so many different outlooks, so many different ways of looking at markets, but they all have things in common, and at the end of the day, they all just work on their craft, and they all have different explanations for confirmation. So yeah, that's my take. I do think that DXY is topped out. We should be getting a massive rejection sooner than later. Don't be fooled. I wouldn't be fooled. The daily candle doesn't look so good now, but we still have many hours before that closes. A few hours, not many, but a few hours, okay? On the hourly time frame, we're completely oversold, and it looks like we're starting to make a move up from this supply level, or this liquidity base, okay, or this support level. It doesn't matter how you want to define it, same thing, right? And if you go through the market, you can see the same thing. And the last thing I'm going to say before I click off, because I need to get ready to pick my sun up. The next move, most people are going to underestimate. When I say Bitcoin's going to 30K, I'm not talking about in 5 weeks. Like, I'm talking about boom, 20 to 30K quantum leap. Think about it. Like, if this is actually going to be a bull market, then the waves, the impulses in the bull market are going to be massive. They're not going to be what we're used to in this consolidation reversal pattern. They're going to be massive, and they're going to move hundreds of percentage points. Okay, in some assets, but in Bitcoin, tens of percentage points to get to their targets. And that's when a lot of people will be like, oh, okay, that's the bull market. But then it's still tricky, right? Because then they're like, oh, okay, I know there's a bull market behavior now, but then how do you make an entry on something that volatile? Okay, because you're going to try to enter on an asset moving, 20, 30% daily, speaking of Bitcoin, and then it's going to retrace 50-60% to make its wave 2 correction or something like that. And a lot of people can get stopped out. But if you're buying leverage, or sorry, on spot, it doesn't matter. But if you're trying to play the leverage game and you want to be cute, you can get shaken out real easy. Yeah. All right, so that's pretty much it for me, guys. Don't be fooled. The next big move is up. It's been that that's been the case for many months now, to be honest with you. Nothing that we've put in now has been really of significance in terms of moves up or down within the larger scheme of things. If you recognize the macro market bottom, none of this, like people have been celebrating for 100 days, any move, if they're bearishly biased, oh my god, I told you guys the bulls are fucked, like with little move, that's nothing, right? And to make money on that, you have to trade at some obscenely large like leverage, on some large margins. That's silly. This has been all accumulation time. If people are really honest and if you're patient, you recognize all of this as basically no movement. The market's been accumulating, and if you've been accumulating, you're going to win eventually. And that's, I think, the best strategy at this point in the market. Guys, if you got value, please like, share, and subscribe. I'm going to call that a stream. So I have to go pick my son up from school and my sister from the airport. Take care. Hope you're having a great Tuesday, and I'll see you guys tomorrow.